Good evening, guys. So how? Yes, students. Yes, students. Tell me, is the video playing? नहीं, मनीष, मनीष,
यस
हेलो
सर।
मनीष, और वीडियो नहीं चल रहा।
वीडियो नहीं चल रहा सर।
नहीं, तो या तो आप बोर्ड लगा दो, फिर आज की क्लास कैंसिल है। ठीक। Yes, students. Now, you are able to hear. So, students, uh, welcome back. We are sorry for some technical issue. So, guys, you understand that audit risk means when the auditors gives an inappropriate opinion, when financial statements are materially misstated. Say the auditor has to state in his report by performing procedures, by obtaining evidence, that financial statements have been prepared in accordance with the applicable reporting financial framework, and they give a true and fair view. So, but now again eco problem is there. So guys, let us wait for 4-5 minutes. I'll come back again. Okay. नहीं, वो इको आ रही है. Students are saying echo is coming. So 1 मिनट आप लाइव हटा दीजिए. मैं हेडफोन दोबारा स्टार्ट करता हूँ. हेलो मनीष. नहीं, एक ही डिवाइस से ज्वाइन. नहीं, अभी मैंने मोबाइल से चेक किया था, मैं मोबाइल बंद कर दिया. एक मिनट मैं लीव कर देता हूँ. अभी लाइव आप हटा दीजिए, मैं लीव कर देता हूँ. So, guys, the technical issue has been resolved, and so the lecture has started late for about 20-25 minutes. So, students, audit risk. So, what is audit risk? So, basically, you can understand that audit risk is the risk of failure of an audit. That what the auditor was supposed to express, he didn't express that, and he gives an inappropriate opinion. Say when the financial statements are misstated, these are materially misstated. There are misstatements in financial statements either due to errors or frauds, but the auditor gives his opinion that uh, these financial statements gives a true and fair view. So the possibility, the chance that the auditor gives an inappropriate opinion is called as audit risk. Okay, so is that clear? So guys, are you still logged in? Yes, students. No mails are being received, guys. Are you still logged in? Yes, guys, drop your mails. Are you still logged in? So, students, there can be example of that. Say if financial statements, if the balance sheet contains uh, some misstatements on account of say wrong charging of revenue items into capital expenditure items, or capital expenditure items into revenue items, so obviously it would be a material misstatement, and there would be a chance that the auditor gives a inappropriate opinions. So what we are talking about is risk of something going wrong. Okay, so before starting his actual work, what the auditor does, is to assess the audit risk. Now so students, uh, basically, as an auditor, I ask you, as an auditor, would you want your audit risk, would you want to keep your audit risk as low or as high? Tell me. Tell me. Yes, students, tell me. You are auditor of a company. Now, whether you would whether you would want to keep your audit risk as high or low? Yes, Dikshita. You are saying lower. Yes, it is correct. Syed, you are saying that audit risk means auditor lose his integrity. No, that is the consequence of that. But audit risk doesn't mean that. It would be a consequence of that. Audit risk only means that chance, the risk that the auditor gives an inappropriate opinion when financial statements are materially misstated. So it simply means that there are misstatements in financial statements, but there could be a chance that auditor is not able to detect those material misstatements. So if he is not able to detect those material misstatements, then wouldn't there be audit risk on my part? Say I am auditor, wouldn't there be audit risk that I would be giving a wrong opinion? Isn't it so? So it simply means that. So all of you are saying yes, low audit risk. That is fine. Vignesh, Himanshu, Syed, Sanjeet, yes, audit risk should be minimized. So in any audit assignment, the auditor would endeavor to keep audit risk as low. Okay. So clear, guys, what is the meaning of audit risk? And auditor would want to keep the audit risk as low. Okay. So students, you have to understand that there are three components of audit risk. So first we are studying theoretical model. Theoretical model so as to increase our understanding that what things form an audit risk. So students, there are three components of audit risk. One is inherent risk, another is control risk, and third is detection risk. Okay, so these are three components of audit risk: inherent risk, control risk, and detection risk. And inherent and control risk together form risk of material misstatements. Okay, and these both risk, students, inherent risk and control risks, these belong to the company, to the client, to the auditing client, and detection risks belong to the auditor. Now this we will study how it is so, and what is the meaning of it. So first we shall be discussing about inherent risk, then control risk, then detection risk, and we will also come to see what is written in your module. So first of all, just listen to what I am trying to say. Okay. Do not search all these things in your module. First try to listen for 5-10 minutes what I am trying to say. So guys, what is inherent risk? Simply understood, what is inherent? What is the meaning of term inherent? Tell me. What is the meaning of word inherent? Yes guys, tell me, what is the meaning of word inherent? What do you understand by the term inherent? Yes. Anybody? Himanshu, Pathak, Varsha, Ayush. What do we mean by the term inherent? No. Vignesh, no. Inevitable is not the proper word. Yes. Ayush, which is in its own. Yes. Himanshu, on limitations, no. Sayyad, internal existing. Yes, Sayyad, you are near it. So inherent mean, guys, coming from within, which say some feeling is coming from me, from inside me, so it is inherent to me. So if we say that uh, he gets very angry, so it is his inherent nature, it is coming from within him. Okay, so yes, in existing itself, Subhashri. So inherent risk mean which is the risk which is coming from within the transaction because of the nature of the transaction. Say I give you an example. Say cash, let us take the example of cash transactions. So are cash transactions inherently risky, or these not inherently risky? Tell me. And why, if these are risky, if these are inherently risky, why it is so? And if these are not inherently risky, why it is so? Yes. Yes, donas inborn is also the correct word. You can say that. So tell me, guys, Ustad, Dipanshu, all of you who are listening, whether cash transactions by themselves inherently, whether these are risky or these are not risky. And if these are risky, then tell me why they are risky. And if these are not risky, then also tell me. Let us see your opinion. Yes, some of you are writing correctly. Inherently risky. Himanshu is saying inherently risky because records can be manipulated. Yes, good, Himanshu. So, because say if a firm, if an entity is making cash sales only, okay, then cash transactions do not leave a trail. These do not leave a footprint. Whereas banking transactions leave a footprint with whom transaction was entered to. Say if I deposit a check in a bank, so it can be easily traced that whose check I deposited in the bank. It can be uh, verified from the voucher of the bank whose which party's check was that. So banking transaction leave a footprint, whereas cash transactions can be manipulated. So if I say issue a bill in cash, then there is no identity of the person is there. So how I can use such transactions to launder money also. Okay, so cash transactions are inherently risky as compared to transactions uh, carried through banking channels. Okay, so this was one example. So another example can be say foreign exchange transactions, because these would involve conversion. Okay, so there is more possibility of misstatements. क्या conversion rate था, whether it was applied properly or not. Okay, so and it can also involve some complex estimates for valuations at the later stage. So you understand, guys, what do we mean by inherent risk? So the question is of only degree. So risk is there in all transactions. It is not that there is in some transactions there is no risk, and in some transactions are risk free. There are there is inherent risk present in all transactions. The question is of degree, which uh, in some transactions the inherent risk could be high, in other transactions inherent risk could be low. Say even if I carry out some transaction through bank, the identity of the person can be easily traced. Okay, but say if the two persons, if the company and that persons collude, and they can also manipulate the transactions. The records will show it is okay, but they may have an understanding, and that transaction can also be manipulated. So it is not that all the transactions carried through bank are risk free. They also carry inherent risk, but the question is of degree. Okay, so you have to understand that inherent risk is present in all transactions. Okay, in some transactions it could be high, in some transactions it can be low. Okay, it cannot be eliminated. So is it clear? Is it clear to you guys what do we mean by inherent risk? Yes, guys. And what do we mean by control risk? Yes, what do we mean by control risk? So, guys, you have a faint idea of what do we mean by internal controls? Okay, these are the systems which are designed and developed by the company, by the management to ensure the reliability of financial reporting, to see that its assets are safeguarded and that the business runs effectively and efficiently. So, without internal controls, you understand a company, a business cannot function because these are itself systems of checks and balances in the company, and these are maintained by the management of the company, by the people who are governing the company, so as to run the business efficiently. So there could be a possibility, students, that the controls which the company had devised, okay, these are not working properly, or these are not operating as these were intended by the management. So there would be a control risk, failure of controls. Whatever controls the management has put, whatever the controls the management has established, these might not work. Okay, because why? Because say some employees of the company may collude, or say the management um, has issued some guidelines, some instructions, some steps for carrying out some procedures, and these are not being carried out. Say if the management, I give you an example. Say if the management has established a control that the head accountant shall perform bank reconciliation every month. Okay, this control is there, that you have to you have to perform bank reconciliation every month. But the head accountant is careless person. He gives a damn about it. Sometimes he makes reconciliation after 3-4 months, but he is not making, he is not performing as was stipulated by the management. Okay, so the very purpose for which the control was established, now it is getting defeated. Okay, so control is not operating effectively as intended by the management. Okay, so therefore in any control system, there is a risk, there is a chance that the controls which are established by the management, these do not work effectively. So there would be a control risk. So what there would be a control risk. Clear, guys? The basic idea is clear. We shall be learning in detail. Basic idea is clear. What do we mean by control risk? Yes. And third is detection risk. And third is detection risk. Now, what is detection risk? Now detection risk, students, this belongs to auditor. You have to understand that this belongs to auditor. So detection risk broadly means that the procedures adopted by the auditor for carrying out audit, these will not be able to detect the misstatements, material misstatements. It may be because he has not performed the procedures properly, or um, say he has selected wrong samples by adopting some wrong sampling technique. So if the sample is not representative, okay, so if the sample is not representative of the population, then then the whole conclusions drawn by the auditor can be wrong. So detection risk is the risk that the auditor will not be able to detect a material misstatements by performing the procedures. It may be due to faulty selection of samples, or it may be due to say performing some procedure wrongly. Okay, say if some procedure was required to be adopted, but he performed some other procedure which does not suit the requirements. Okay, so it is not going to yield the desired result. Clear, guys? So broadly you understand what do we mean by inherent risk, control risk and detection risk, and now we shall elaborate upon these terms from your module. So students, audit risk is a function of risks of material misstatement and detection risk. It is a function of two things, that is risk of material misstatement and detection risk. So audit risk, mathematically it is expressed as risk of material misstatements multiplied by detection risk. So what is risk of material misstatement? So risk of material misstatement means that financial statements are materially misstated prior to audit. कि audit करने से पहले there is a chance that there are wrongdoings in financial statements, there are misstatements in financial statements, there are errors in financial statements, or frauds have been committed, frauds have been perpetrated, and which are resulting in misstatements in the financial statements. Okay, so this is called risk of material misstatements. Now why this risk of material misstatement arises? It can arise because of inherent risk. So it has got two components. It can arise because of inherent risk and control risk. दो ही चीजों से हो सकता है students. You understand? Risk of material misstatement can arise only from two things. What are those two things? One is inherent risk, second is control risk. Inherent risk is because of the nature of transaction itself. That transaction is such that there is a risk. And what is control risk? That the control system which the management has established, it is not working. Okay, so therefore risk of material misstatement is a function of both inherent risk and control risk. Okay, and what is the uh, technical definition of inherent risk? it states the susceptibility of an assertion about a class of transaction, account balance or disclosure to a misstatement that could be material when aggregated with other statements before consideration of any related controls. Okay, so before any controls are considered, some assertion, say in the financial statements, like say sales, purchase, or a debtor balance, a creditor balance, or a balance of property, plant or equipment, it could be materially misstated. So what do you mean by susceptibility? Susceptibility means it is more prone, it is more sensitive to that. So the susceptibility of an assertion, assertion किन बारे में हो सकती है? तीन चीजों के बारे में. Assertion can relate to three things, as you have read in chapter 3. It can be about transactions, it can be about account balance, it can be about disclosure. Okay, so the susceptibility of an assertion about a class of transaction, account balance or disclosure to a misstatement, okay, that could be material. So that should be material also, either individually or coupled with other misstatements. Okay, before consideration of any related controls, without considering any controls, by itself, the that should be risky or less risky or more risky. Okay, so there is always a risk that before considering any control in an entity, a particular transaction balance or disclosure in the financial statements may have a chance of being misstated. So this is known as inherent risk. Okay, so clear guys, what do we mean by inherent risk? And you have to understand that inherent risk belongs to company, to the entity. Auditor cannot do anything about it. Say if the transactions have been entered and these are of such nature that auditor perceives these transactions to be of high risk, then can the auditor control it? Yes, tell me. If the auditor during the course of audit finds that some transactions um, are of high risk, these carry greater risk, so can auditors do something about it? Is something in his control that he can do anything about it? Yes, tell me. Yes, Varsha, Himanshu. Can auditor do anything about inherent risk? He can only assess. He can only assess. He can't do anything. Yes, Subhashri, Himanshu, you are stating correctly. He can't do anything about it. So therefore, we say that inherent risk belongs to the entity, to the company. Okay. And what is the control risk? So control risk is a misstatement that could occur in an assertion. Assertion again. So these are the three keywords, guys. Assertion, you have to remember, it can relate to a class of transaction, it can relate to account balance, or it can relate to disclosure. Okay. So while studying, guys, so remember all these things. So these are technical words, so you have to learn these words. Okay, that could be material either individually or when aggregated with other misstatements. Will not be prevented or detected and corrected on a timely basis by the entity's internal control. Okay. So, and Syed, you are stating that in the example given by me, if bank reconciliation statement is not prepared at all, so it is also a failure of control. It would not treat it. It would not jump to inherent risk. Say the management has devised a control. Management has stipulated a control that BRS is to be prepared every month, but it is not being prepared. Okay, so it means that the person who was able to supervise, say, accounts manager, he was not able to check the work of accountant and prompt him to prepare the bank statement. He has not prepared the bank statement for 6 months and no action has been taken. So it can also happen. So the control risk is there. So control risk simply means that a control which was planned by the management, there would be a chance that it would not work, or it would not detect or correct material misstatement, or it would not be able to prevent material misstatement. Is that clear? Yes, Syed. So control risk is a risk that internal control existing in an entity would not be efficient enough or to stop from happening and then rectify in appropriate time any material misstatement relating to a transaction. Okay. So control risk, students, this would always be there. The auditor cannot gain 100% satisfaction that controls would be operated effectively. No system designed by the management can be foolproof. It cannot be foolproof because there is always issue about the integrity of persons. The persons may collude. Some persons have the habit of bypassing the rules. Okay, or some persons may misunderstand the instructions. They do not understand the instructions. Okay, or they might do the things with the motive to commit a fraud. Okay, so therefore, but you see, if the control system is efficient, if the control system is efficient, say if the accountant is not preparing the BRS every month, then the next higher authority, say accounts manager, he is keeping a check and he asks him that you have not prepared the BRS. Okay, so then the control system is efficient. It means that control is working. Okay, so the management had established a control that uh, if he doesn't check, then next step is there, so and so on. So if the efficiency of control system is high, then would is it useful for auditor? Can then in such case would auditor place a higher degree of reliance on control or lower degree of reliance on control? Tell me, guys. If the control systems developed by the management, developed by the company, these are efficient. If these are efficient, then would auditor be able to rely more upon controls, or he would be able to rely less upon controls? Tell me. Yes, Kiran Shukla, as you have responded, you are saying higher. Yes, it is correct. If say the efficiency of control systems is high, then the auditor can rely. He would have the comfort. He can rely upon the control systems. His level of assurance is increased. Okay, Yes, more dependent, Syed, you are right. So therefore, it can be said that there exists an inverse relationship between control risk and efficiency. Okay. So when efficiency of control is high, so when efficiency of control is high, it means that auditor can place more reliance and the possibility of control risk is low. Control risk is low. So what is control risk? Risk that controls will not be able to prevent, detect or correct material misstatements. So that possibility would be low. So there is an inverse, ulta. There is an inverse relationship between efficiency of internal control and control risk. Clear, guys? So if efficiency of internal control is high, it means these are more dependable, but control risk is low. Okay, since these are more dependable, the chances that something will go wrong, these would be low. So there is an inverse relationship. Similarly, if efficiency of internal control is low, sorry, then it means that auditor would not be able to place reliance on those controls. Okay, and control risk would be high, meaning that there would be a greater chance that control systems of the management would not be able to prevent, detect and correct material misstatements. Clear, guys? Is that clear? Students, tell me. Inherent risk and control risk is clear to you? And these are together known as risks of material misstatements. These are together known as risks of material misstatement. So risk of material misstatement has two things, two components. These are inherent risk and control risk. Now the auditor, these risks belong to the company, to the entity. The auditor cannot do anything about it. These are present there. Control system is also built by the management and transactions are also carried out by the company, by the management. So what auditor can do about it? He cannot do. If some transactions are risky, these are risky. If control risk is there, if its efficiency is not high, then obviously there would be a greater chance of material misstatements. Okay, higher control risk would be there. So Himanshu, you are asking what if control has not been established in a certain matter? So if a control has not been established in a matter, that would make the transaction itself risky because there is no control in it. There is no control has been established. So again, the audit risk would be high because one thing is that you establish some control and one thing is you leave everything open. So if you do not establish some control, then then how the auditor would be comforted that that the company is carrying out its work in a proper way, company is carrying out its business activities in a proper way. So you have to remember also, Himanshu, that it is a prerequisite for an audit. You remember chapter 1? So we had learned there that it is a prerequisite for carrying out an audit that management should acknowledge that they are responsible for preparation of financial statements and for for establishing, devising a proper internal control system. Okay, clear Himanshu? So guys, अब ये कई बार टर्म आ रही है misstatement. So what exactly is misstatement? What is the technical definition of misstatements? So students, one more thing in all those half an hour was lost in due to some technical issues. So all this chapter is all about largely based upon essay 315. The whole chapter number 4 is largely based upon essay 315. Now what is essay 315 is identifying and assessing risk of material misstatement through understanding the entity and its internal control. Okay, so essay का नाम ही यही है, that identifying and assessing risk of material misstatement. How? Through understanding the entity and its internal control. Okay, so what is the technical definition of misstatement? Now we'll come to that. So misstatement refers to what? A difference between the amount, and now 4 things are there. These are the keywords: amount, classification, presentation, or disclosure. So you can remember this as ACPD of a reported financial statement item, and the again amount, classification, presentation, or disclosure that is required for the item to be in accordance with the applicable financial reporting framework. Say if the purchases are stated in the financial statements of for rupees say 5 lakhs, and say sales, let us take example of sales. If sales are reported in the financial statements say for 50 crores, okay, but you find that that the company say has not followed the relevant provisions of accounting standard, and sale should have been recognized for say 55 crores. Okay, so that is a material misstatement in the what? In the amount. So in financial statements it is 50 crores, but what the applicable financial reporting framework it required was 55 crores. So it is a material misstatement. Okay, so there can be material misstatement in amount, there can be material misstatement in classification. Okay, in classifying some item. Okay, like say classifying some item under wrong heads, or there can be mistake in some disclosures or presentations. Say if schedule 3 of the Companies Act requires something to be disclosed. Okay, it is there expressly written in schedule 3 to disclose say detail of shareholders having more than 5% of shares of the company, but that is say not disclosed, or that is not properly disclosed, so that would also become a misstatement. Okay, and whether presentation is in accordance with the format prescribed by the applicable financial reporting framework. So all those heads are being followed which are there in applicable financial reporting framework. So misstatement can be in any of these 4 things. Okay, so simply understood, misstatement can be in amount, misstatement can be in classification, misstatement can be in uh, presentation, misstatement can be in disclosure. Okay, so misstatement is simply difference between what these things were required to be reported and what these are actually reported. Okay, so if there is difference, if there is material difference between these two things, then it becomes a misstatement. Clear, students? And misstatement, this you already know, these can arise because of errors or frauds. दो ही चीजों से हो सकती हैं. Either it is a genuine error, say if this mistake is genuine and the management has misinterpreted the um, stipulations of some accounting standard, okay, and wrongly recognize the revenue, or it can be intentional also, it can be due to fraud also, to falsify the results, to show, to suppress the profits. Okay, so clear, guys? Yes, students. Is the definition of misstatement clear to you? So another thing you have to understand, guys, that this whole thing of risk assessment, it is a matter of professional judgment of the auditor. Number one, it depends upon his expertise, his knowledge, his experience. All these go into what constitutes, what makes professional judgment. Okay. So you would say, what is professional judgment? So professional judgment is cumulative of all these things. So whatever experience, say if I have experience of say some years, then my judgment would be molded by that, because by performing the professional work, by having knowledge, I have I accumulate I accumulate certain capability to arrive at professional judgment of these things, professional judgment of risks. So that is why we say that assessment of risks is based upon professional judgment of the auditor, and it is a very subjective thing. You cannot say that risk is 5.6. It is not capable of precise measurement. You have to understand that it is not capable of precise measurement. I cannot say that inherent risk is in this company is 7.7%, or control risk is so much percent. It cannot be precisely calculated. Even if I am making an if even if I am expressing something in percentage, it would be a subjective sort of thing. It depends upon my professional judgment. As I have already told you, these are the risk assessment. This is only of degree. Okay, I would assess that inherent risk in this company is low. Okay, the all payments are being made through banking transactions. The customers place orders on the website of the company, and they are making advance payments, and the company is delivering goods to them at their doorstep. Okay, so identity of the buyers is also there, payment is also being received online on the online platform of the company through digital channels or banking channels. So I may assess the risk as inherent risk as low. Okay, if I consider only this thing. Okay, and say in case of a new company which is growing very rapid. Okay, in that company the controls might not be established. So compare a new company, say, which is in the business for 5-6 years, 4-5 years. in comparison to a company which is there for 25 years. So the company which is there for 25 years, it is already established. So the control systems in that company may have become structured, formalized. Okay, but in a new company, these might be in the process of stabilizing. Okay, so in that in a new company, I may assess the control risk is as high or as moderate. Okay, so is that clear to you guys? So Darshan, you are saying control risks are also inherent in nature. So these Darshan, you have to understand these two are different terms. आप inherent को control से confuse मत करें. Inherent risks means those risks which are there by virtue of the transactions before we think about controls, before we consider any controls. Control comes later on. Because of the nature of the transactions, before consideration of any control, these transactions carry a certain inherent risk. And when the company establishes some control system, it devises some control system to carry out its operations, to carry out its business, then control risks come into the picture. Okay, clear, Darshan? So guys, this also you understand that assessment of risks is a matter of professional judgment. Okay, and it is not capable of precise measurement. So what is not included in audit risk? So two things you have to understand, students. One is that audit risk is a technical term. Audit risk is a technical term used in the process of auditing. It does not include those risks. Say if auditor does something wrong, or if he gives some false certification, if he gives some false report, or if he does not carry out his work professionally, then uh, there may be liability on the auditor. Okay, he may lose his reputation. So these things are not included in audit risk. These are risks, separate risks. ये तो ऑडिटर के अपने पर्सनल रिस्क हैं. दिस इज नॉट कंसर्न विद ऑडिट रिस्क. से किसी की रेपुटेशन का लॉस हो जाता है. बट दिस इज नॉट टू बी कंफ्यूज्ड विद ऑडिट रिस्क. ऑडिट रिस्क का लिमिटेड मतलब है कि ऑडिट परफॉर्म करते हुए इस बात की पॉसिबिलिटी कि ऑडिटर इनअप्रोप्रिएट ओपिनियन दे दे, जबकि फाइनेंशियल स्टेटमेंट्स में मटेरियल मिसस्टेटमेंट्स हैं. सिर्फ उसका इतना सा मतलब है. उसके कॉन्सिक्वेंसेस क्या होंगे, व्हाट वुड बी द कॉन्सिक्वेंसेस, उससे वेदर ही वुड बी involved in some legal trouble or there would be a loss of reputation. These things are not part of audit risk. Rather, these are consequences of that risk, that possibility having actually materialized. Okay, so when the auditor assesses the audit risk, he is only thinking about possibility, about the chance. He has not yet given the opinion. He is only thinking about the possibility. When he gives an inappropriate opinion, then that risk has actually materialized. That audit risk, which was that chance which was there, it then fructifies, it then comes into operation. Okay. And audit risk does not include the risk that the auditor might express an opinion that financial statements are materially misstated when they are not. Why? So students, normally we have understood that the auditor gives an audit risk is a risk that auditor gives an inappropriate opinion when financial statements are materially misstated. But reverse of this is not true. That say when the financial that the auditor might express an opinion that financial statements are materially misstated when they are not. Say there is no mistake in financial statements, there are no errors or frauds in financial statements, there are no misstatements in financial statements, then what the chance that the auditor would give a reverse opinion, that he would say that financial statements are materially misstated, this is not covered under the audit risk. Why? Because this risk is very insignificant. There is a remote possibility of this happening, that the financial statements of a company do not contain misstatements and the auditor gives a reverse opinion. He gives the opinion that financial statements do not reflect a true and fair view, that these are materially misstated. So audit risk does not cover this risk. Why? Because the possibility of this happening is very, very remote. Okay, it is insignificant. Yes, Darshan, you are right. Yes, Syed, you have asked if very old company acquires holding in a new company, will there be a control risk? Again, Syed, control risk would be there. It would always be there. The question is of degree. You cannot eliminate control risk. Syed, you have to understand. You cannot eliminate inherent risk. You can, because these risks are dependent upon the company. The company is concerned with those risks. The auditor can only assess their degree. The auditor can only assess their degree. Okay. No, Subhashri, the auditor does not give wrong opinion purposefully. He does not give wrong opinion purposefully. So, Sayyid, is the point clear to you? I will also explain to you in another way. So, Sayyid, I will try to clear you the point in this way also. Say this is audit risk, students. This mathematical equation would come later on. It is inherent risk multiplied by control risk by detection risk. Now, simply, students, you have to understand what you had learnt in chapter 1. Tell me. What you had learnt in chapter 1? You had learnt in chapter 1 that audit risk cannot be zero. You had learnt? You remember? Yes, students, you remember? You had learnt that audit risk cannot be reduced to zero. It cannot be eliminated. So, if I could have reduced inherent risk to zero, or if there was a possibility of reducing control risk to zero, then audit risk would automatically become zero. But it cannot be. It cannot be. क्योंकि ऑडिट रिस्क तो जीरो हो ही नहीं सकता, वो कुछ ना कुछ तो रहेगा. ओके, सो none of these factors can be zero. None of these components can be zero. Neither inherent risk can be zero, neither control risk can be zero, neither detection risk can be zero. We are talking about students, guys, risk. हम पॉसिबिलिटीज की बात कर रहे हैं, एक्चुअल की बात नहीं कर रहे. रिस्क इज अबाउट पॉसिबिलिटी, चांस ऑफ दैट हैपनिंग. यू अंडरस्टैंड? Yes, Sayyid. Now, I had already told you that I will give you an example by which you would immediately understand. So I knew where you are stuck. I could sense where you were stuck. Okay. Because if any of the risks is zero, then audit risk would be zero, which cannot be there, which we have already learned that audit risk cannot be zero. It can only be reduced. So therefore, the question is only of the degrees of these risks. Okay. So inherent risk would always be there, whether it is low or high. Control risk would always be there, whether it is low or high. And detection risk would always be there, whether it is low or high. Okay. So therefore, audit risk would always be there. So therefore, audit risk would always be there, whether it is low or high. So now students understood? Yes, tell me guys, any doubt? So guys, we know that many students till their finals, they fail to understand this concept, because they do not understand that what we are discussing about possibilities. We are not discussing about actuals. When we are discussing risks, risk is always a possibility before something actually happens. Say if I am going on a road, okay, and somebody hits, so then that would become an event. But before that, there would be a risk, there would be a chance that I could be hit. So similarly, is that clear, students? Yes, Kiran, Darshan, Ayush, Ustad, you are saying yes. Varsha? Yes. So guys, you have to again remember that risk of material misstatements, it operates at two levels. At financial statement level, at overall financial statements, and at assertion level. Like there can risk of material misstatement when it is present at overall financial statement level, it means the risk that which can pervade to the statement as a whole, so as to make those balance sheets, those financial statements materially misstated. And at assertion level, it uh, it relates to each assertion. Okay, each assertion pertaining to transaction, account balance, or disclosure. Okay, so risk of material misstatements exists at two levels: at the level of financial statement as a whole, and at the assertion level for class of transactions, account balances, and disclosures. Okay. So components of risk of material misstatement, this I have already explained to you in great detail, in simple language. In simple language. So now let us quickly go through what your module says. So risk of material misstatement at assertion level consists of two components. One is inherent risk and control risk. We have already seen that risk of material misstatement consists of internal risk and control risk. So this is the equation. Okay. So inherent risk and control risks are the entities risks. They exist independently of the audit of financial statements. This is very important, guys. This is the funda of this whole risk exercise. This is the basic funda, that inherent risk and control risks, they are the company's risks. चाहे audit हो या ना हो, whether an audit is carried out or not carried out, these risks would always exist, because these are risks of the company, these are risks of the entity. Okay. Clear, guys? So inherent risk is higher for some assertions, like we had discussed about cash, and for say complex calculations, or say some technological developments, business might make a product obsolete. Okay, so if industry is such, then there would be inherent risk. Okay. So why do we study inherent risk? Because say if I find some transaction risky, then I would design my audit procedures accordingly, more detailed. Say then more tests of controls in detailed checking I would be carrying out. Substantive procedures, what you have read in chapter 3, I would be carrying out in detail. I would increase my area of checking. Okay. So say like say in some industry, से किसी प्रोडक्ट की आजकल मार्केट में डिमांड नहीं है उस इंडस्ट्री में, सो ऑब्वियसली it would mean more inherent risk for the auditor. Why? Because the company would not be making profits, and the demand is demand of the company's product is low, so fixed cost may be high. So there the management may it may entice the management to give some false results. अपने मार्केट में रेपुटेशन बचाने के लिए कंपनी अपने रिजल्ट्स मैनिपुलेट कर सकती है. So inherent risk would be more. Okay. Yes, Sayed, you are asking why in assertion level is given a separate category. So these are for the auditor to understand. These things are being explained to you to as a theoretical model for you to understand that that the risk of material misstatement is it can be limited at the assertion level only, or it can relate to the overall financial statements. Okay, it can be pervasive, it can be pervading everywhere. Okay, so as to make whole the financial statements materially misstated. Or it could be limited to one assertion. Darshan, this I have already just explained how technological development or obsolescence can lead to risk of material misstatement. I have already explained. Say if some product getting obsolete quite rapidly, okay, then what is the chance? What is the chance? There is a chance that inventories would be materially misstated. Why? Because the company may not have made valuation of inventory properly by accounting for by making allowance for obsolete stocks. Okay, and another factor could be that if the company's products are being are getting obsolete rapidly, there can be a situation when there is no market left for the products. So the company would be stuck up with the stocks. It would not be able to convert the stocks into debtors and from debtors to cash. Then whole the working capital cycle of the company would be broken, and the company would be in operating losses. Yes, here you is buffering. Please see. Please see if the video is moving. Yes. Yes, guys. Hope I think the problem has resolved. So what is control risk? So control risk is the function of effectiveness of design, implementation, and maintenance of control, internal control by management. Okay. Again, internal control can only reduce but not eliminate risk of material misstatement. Why? This I have already told you. Because the internal control process itself has inherent limitations, like the employees may collude. Okay, they may not follow the rules, or say the employees do not understand the instructions properly. Okay, or they just simply they make the mistakes, like human errors are there, by punching mistakes, data feeding entry mistakes, genuine errors can be there. So the purpose of control is, if the if there are some errors, say if there are some genuine error, then control is able to detect those errors and take timely corrective action. Okay. So, but therefore, some control risk would always be there. Some control risk would always be there. Clear, students? So, this point also I have explained all plain common sense general language, that auditor assesses control risk as to rely or not to rely, not rely upon controls. Say if the efficiency of control system is high, then the control risk would be low and he can choose to rely upon controls. If the efficiency of control system is low, then he may not choose to rely upon controls and control risk would be high. Okay. So all these things. So when he is checking about controls, he is checking about significant class of transactions. Okay. So the transactions which are significant class of transactions too, and there, and after taking into that, he prepares his control strategy. Guys, is the video now clear? Yes, is the video clear now? You are able to hear me? You are able to see me so that we can proceed further. So, yes, now mail has come. It is clear. Yes. So students, what happens? Say identifies some control deficiencies. So what are control deficiencies? Control deficiencies uh, their systems which could affect the assertions of financial statements. Okay, so like we again take the example of bank reconciliation statements. So this is a deficiency if the accountant is not preparing the bank reconciliation statement monthly management as was intended by the management, then then this control is not being enforced, then this would be deficiency. Then auditor would see that what is its effect on the assertion on the financial statements. He would verify the balances with the bank statement. Okay, and he would see whether the controls are can be relied or not. Okay. So again, buffering problem is coming. So guys, at this stage, I think we should take a break for 5-7 minutes. So see you after 5-7 minutes, and probably by then this buffering problem would also resolve. Okay, guys. So break for 7 minutes. Yes. Welcome back, guys. So, Varsha, you are saying that you are not able to understand. Please tell me what you are not able to understand so that I can explain that. Yes, Mrs. Varsha, you are saying that you are not able to understand. Please tell me what you are not able to understand. Which point you are not able to understand? Drop your mails. Drop your mail so that I would take up that point. So for the time being, we shall be moving further. So guys, as I have told you that risk of material misstatement may be expressed in quantitative terms such as percentages or in non-quantitative terms like it is of high degree, it is of low degree, or and it is not capable of precise measurement. Okay, so the point here is that you have to uh, you have to see what approach is not important, but whether you have made appropriate risk assessment, that is more important. Okay, so say if you have made an assessment that risk is low, that say control risk is low, but in fact control risk is high, then it would impact your ultimately your audit risk, and you may land in uh, giving a wrong opinion. Okay. Yes. Now, Varsha, last point which we were talking, who had asked, somebody had asked that how if rapid technological developments, say, which are making a product obsolete, how it would lead to risk of material misstatement. Okay, somebody had asked this question. Darshan, yes, Darshan had asked this question, and I was in the process of explaining it. So see what happens if the company is operating in some industry in which products are getting obsolete, are getting outdated very fastly, quickly. Okay, then there would be a risk of material misstatement, say pertaining to valuation of inventories, because the company may not have made error in valuing the inventories. They may not give a proper allowance uh, for obsolescence factor. Okay, they might not have given proper allowances therefore, or even otherwise, if the product is getting obsolete too fast, the company, it may end up with piling of inventories with the company, and the company may not be able to sell the products, and in that case the company would not be able to convert those inventories into sales and in debtors and bringing that as a cash in its bank account. So it may impair the ability of the company to continue as a going concern. So obviously all these factors would make the whole this transaction very risky. Okay. Now you are saying you have got it. Yes. So, and students, you have to understand that normally in all essays, the term risk of material misstatement is used. Risk of material misstatement is used. We are breaking into inherent control and control risk for our own understanding. So all essays, uh, say essay 200 or other essays, say essay 500, essay 330, these all refer to risks of material misstatement. But for our understanding, we are breaking risk of material misstatements into two components, that is inherent risk and control risk. To, so as to better understand it. Okay. Yes, Darshan, you are right. So risk of material misstatement is, what is mathematical equation? It is inherent risk multiplied by control risk. Okay. And so we can say, since audit risk is risk of material misstatement to detection risk, so we can say that audit risk is inherent risk multiplied by control risk multiplied by detection risk. So it is important to remember this mathematical equation. And not only remember this, but also significance of this. So what does this show? This shows that audit risk is a factor of risk of material misstatement. These two factor combines and detection risk. And this also shows that audit risk cannot be reduced to zero, because and none of these factors can be reduced to zero, because if any of these factors is zero, then audit risk becomes zero. So something would always remain, some risk. Guys, we are talking about risk, not actuality. We are talking about risk. So now we come to detection risk. So risk of material misstatement तो company का हो गया, it belongs to the entity, and its two components, inherent risk and control risk, these also belong to the company, to the entity. Now detection risk, this risk is only in the hands of auditor. It is influenced by the auditor. He can leverage it. Okay. कितना चेक करना है, to what extent checking is to be done, which procedures are to be adopted, how much large a sample should be, all these things are in the hands of auditor. Okay. So detection risk is the chance, it is the risk that the procedures performed by the auditor would not be able to detect the material misstatement. So the risk that the procedures performed by the auditor to reduce audit risk to a low level, ultimately तो उसको audit risk कम करना है, that procedures performed by the auditor to reduce audit risk to a low level will not detect a misstatement that exists and that could be material, either individually or when aggregated with other misstatements. Okay. So it may be due to, say, faulty selection of samples. Okay. Or faulty selection of audit procedures. Like suppose auditor of a company uses certain procedures for purpose of obtaining audit evidence and reducing audit risk, but there would be still a risk, because he may end up giving an inappropriate opinion because his procedures were faulty, because because whatever he choose to check, these in fact didn't have the ability uh, to detect those material misstatements. Okay. So Subhashri, you cannot write it generally. Mistakes made by employees come under inherent risk or control risk. You have to write a situation. So I tell you that when we would be doing correct or incorrect type of questions, so there are few situations given, then you would be able to realize how to properly frame it. Okay. So you have understood, guys, detection risk. Yes, students, you have understood detection risk. Meaning of detection risk is clear to you. Any doubt? Yes, students. Meaning of detection risk is clear to you, students. Tell me, guys. Meaning of detection risk is clear to you. Yes. So, guys, as per essay, yes, Darshan, you are right. That even we are talking about possibilities. Even when appropriate procedures are applied, there is a chance that these procedures are not able to detect material misstatement. This is all what risk is all about. Again, we are talking about risk. Okay, possibility can always be there. Risk denotes possibility. Risk denotes chance. Okay. So essay 315, students, it deals with, what is the name of essay? Identifying and assessing the risk of material misstatement through understanding the entity and its environment, including its internal control. So this whole essay 315, relates to how the auditor has to identify and assess the risk of material misstatement. How the auditor has to identify and assess. He has not only to identify, but he has to evaluate also. He has to assess also. And how he will assess? He will assess these risks by gaining understanding of the company, by knowing the company, by understanding the environment in which the company operates, by understanding its internal control system. Unless I have the knowledge about the company I am going to audit, how I can identify and assess the risks of material misstatements? If I do not know about the business of the company, if I do not know a damn thing about the how the company is financed, I do not know about anything about the promoters of the company, I do not know anything about the industry in which the company is operating, I do not know about the profits of other companies operating in the same sector, then how I would identify that there is a possibility that financial statements can contain material misstatements? It is only when I gain the understanding of the company, its system of operation, its internal control, then only, number one, I would be able to identify the risks. Number two, I would be able to assess those risks of material misstatements. First, I would have to identify, and then I would have to evaluate. I would have to assess that, okay, these risks are there, but how significant these risks are? What what if, say, I would ask, if these risks materialize, then what would be the effect on financial statements? What would be the effect on the assertion? What would be the effect on the profits? Whether the profits would convert into losses, then whole of my opinion would go wrong. Say, if the financial statements are showing profit, and due to certain misstatements, if those are corrected, then profit would convert into loss, then whole my opinion would be totally misstated. I would be stating that the financial statements give it uh, true and fair view about the state of affairs and of the profits of the company, where in fact there would be losses. Okay. So this essay 315 is about all these things. So these things, risks of material misstatement can be either due to frauds or due to errors. Okay. at the financial statement level and at the assertion levels. Clear, guys? So what does SA 315 deal? So what are the objectives of auditor as per SA 315? Objectives of auditor as per SA 315. So the auditor shall identify and assess the risks of material misstatement at financial statement level and at assertion level for class of transaction, account balances and disclosures. This I have already told you. To provide a basis for designing and performing further audit procedures. Okay, why the auditor needs to identify and assess risks of material misstatements? Because by doing such exercise, by doing such activity, he gets a basis upon which he can design his tests of control or his substantive procedures. If he has not done this exercise of identifying and assessing risk of material misstatements, then either he would be involved in, say, checking each and every item, and he would make the audit exercise useless and futile, and in the process he may end up ignoring significant areas where material misstatements could exist. Okay, so that is why there is a system, there is a procedure in essays which requires the auditor to first identify and assess risks of material misstatements. Now the purpose of identifying and assessing the risks of material misstatements is so that the information gained through these by the process of identifying and assessing the risks, the auditor can use that information for designing his procedures, his further audit procedures, for designing his substantive procedures, for designing tests of controls. Okay, so clear, guys? So objective of SA 315 is clear to you. So guys, in every standard, in every essay, if you remember the objective, the scope, what does this essay deal with? Okay, so many things would naturally flow out of that objective. So it is very important to remember. आपको और कुछ चीजें भूल भी गई ऐसे में से, but if you remember the objective, okay, then you know that objective is clear to me, that then you can make some reasonable guess. Okay, even if you forget in the exam, but you understand what this standard was all about and what it dealt with, what was the objective. Okay, so you would be in a position to make reasonable guesses, intelligent guesses. So for the purpose of identifying and assessing the risks of material misstatement, the auditor shall, number one, identify risk throughout the process of obtaining understanding of the entity. So when he is gaining an understanding of the company, then throughout he would be identifying the risks. Okay, throughout the process of understanding the entity and its relevant controls, that whether control can go wrong, if this control can go wrong, then what would be the effect. Okay, so the company is in this line of business, what is the outlook of the company in this sector. So these things would help him in identifying that where could be the possibility Like where could be the possibility of material misstatement? Say if there are 5 companies operating in listed companies operating in same line of activity, broadly assume they are in the same line of activity, and one company is showing say 10% net profit, and another company of which you are the auditor, it is showing say 25% net profit ratio. It can be, but the possibility can be there that the company has fudged its accounts. It doesn't mean that there are always misstatements, but the possibility increases, the risk increases. So that is why it is necessary to obtain an understanding of the company. Okay, assess the identified risks. So when you identify a risk, say I identify the risk that revenue of the company can be overstated. There is a possibility, there is a chance that revenues of the company can be overstated. Now I would assess that if revenue is overstated, then it could have impact on other items also. If revenue is overstated, it can have impact upon the profits also. Okay, and it can have a pervasive effect on the financial statements. So relate the identified risk to what can go wrong at the assertion level. See what can go wrong and what controls are there, what controls have been devised by the management to uh, prevent that risk from happening, and consider the likelihood of misstatement. What is the possibility that misstatement would occur? Okay, guys. So now we come to risk assessment procedures. Now, as the name denotes, guys, yes, guys, as the name denotes, you have also done this term in chapter 3 on audit documentation and audit evidence. Now, tell me, what do we mean by risk assessment procedures? Do not write the definition as given in your module. Just write plainly from your common sense. From your common sense, you just write what is the purpose of risk assessment procedures. उसके नाम से ही पता चल रहा है. Tell me, what is the purpose of risk assessment procedures? What is the objective? what what is the objective of carrying out risk assessment procedures by an auditor? Yes, guys. Yes, guys, are not receiving your mails. Tell me, what is the objective of risk assessment procedures? Yes, students. No mails have come. Students, you are able to see me? Yes, Sayyid, Darshan, you are writing audit procedures performed to identify and assess. Yes, Sayyid. Dot on the point. It is completely correct. So the procedures which are performed by the auditor to identify and assess the risks of material misstatement, whether due to fraud or errors, these are known as risk assessment procedures. What these are called as risk assessment procedures. Procedures to carry out, to identify and assess the risks of material misstatements. So, how risk assessment procedures can be performed? Now, let us see what is included in risk assessment procedures. How risk assessment procedures can be performed? Say, guys, I can inquire. One thing is inquiry. I can inquire from the management persons. I can inquire from the staff. I can inquire from the employees of the company. Say I can ask from the marketing personnel of the company, marketing head of the company, that what is the position of orders in your hand in the coming year. Okay, so here I am just simply making an inquiry, or say I can ask from the say head of the legal department of the company whether there are any pending litigation cases of the company against the company. So by making such inquiries, I can identify that where there is a chance of misstatements happening in the financial statements. Okay, where there is risk of material misstatements. Okay. Further, I can also perform analytical procedures. So analytical procedures also you have understood in chapter 3. So say like analytical procedures, like students, I have given you the example of the uh, net profit ratio of the companies operating in the similar industry. Say if the other companies, the published accounts are showing a net profit ratio of say 10%, and the company of which I am an auditor is showing net profit ratio of 25%, then obviously it should alert me. Why it is so? It may happen that my margins are generally higher, but it should prompt me. So what I am doing when I am analyzing this information, when I am comparing this information, or say if I am comparing this information uh, with the previous financial year statements. Okay, if there is a normal jump in the net profit ratio of the current year, then what I'm doing, I'm just applying analytical procedures. I am trying to establish relationship between the data. Okay, I am making an analysis. So I can use analytical procedures also as risk assessment procedures. So similarly, observation and inspection. Say when I observe something, say I am observing, I am not actually counting, I am not actually performing a substantive procedure. Say I am observing some activity being performed by the staff of the company. I am simply observing and I am simply noticing it, or I am observing the production process of the company. Okay, so many questions would arise in my mind, and accordingly I can identify and assess the risk. Similarly, when I am inspecting some document, I am inspecting say control manuals of the company, or I am inspecting some document, then it also helps me to identify and assess risks of material misstatements. So therefore, these three things you have to remember: inquiries of the management and staff of the company. Number two, analytical procedures. Number three, observation, and number four, inspection. So these are also risk assessment procedures. No doubt these are audit procedures. Audit procedures, so inquiry you have read in chapter 3, it is an audit procedure. Observation is also an audit procedure. Inspection is also an audit procedures. Analytical procedures are also audit procedures. But here these audit procedures are being performed as risk assessment procedures. Their nature changes. Yes, Darshan, you are saying that risk assessment procedures do not provide sufficient appropriate evidence. Yes, we are coming to that. So first try to understand कि risk assessment procedures का मतलब क्या है. Purpose, what is the purpose of risk assessment procedure? It is to identify and assess risk of material misstatement. To only pinpoint the possibility that these things can go wrong. That if these things go wrong, there is a chance, there is a risk that this could lead to material misstatements in the financial statements. Okay. Now, Darshan, you are saying that risk assessment procedures do not provide sufficient appropriate audit evidence. Yes. Risk assessment procedures, the sole objective of risk assessment procedure is to identify and assess the risk, the possibility of happening, whereas sufficient appropriate evidence is obtained only when you actually carry out substantive procedure, when you actually test, when you actually perform tests of controls. Say I have assessed that there is a possibility uh, of risk, there is a risk of material misstatements in debtors. Okay, in trade receivables. I have assessed by performing risk assessment procedures, by making some sort of analysis, by aging analysis. I have assessed that these figures, this relationship does not sound good to me. There is a possibility that there is some unusual relationship is being depicted, and there is a possibility that debtors are or trade receivables are misstated. Now, this understanding I have got by performing risk assessment procedures. But whether actual misstatement is there or not, that uh, I would come to know by performing substantive procedures, when I would be actually sending confirmation in accordance with SA 505. Okay, when I would be actually sending the confirmation and evaluating the response which I got from that debtor. Okay, so you understand, Darshan? Is it clear? No, recalculation or reperformance, these cannot be used as risk assessment procedures. When I say recalculate something, then how I am identifying the risk? I have already performed the recalculation. Similarly, when I am reperforming something, say the aging has been done by the accountant, and I am again I am again performing that control, then I am performing substantive procedure. Here I am not identifying and assessing risk. Is that clear? Yes, Varsha, you are right. No, not to accept. These do not help him. So say risk assessment procedures start only when the auditor has accepted the appointment. Its only purpose is he has started the audit. Now he has to first, before he starts checking on controls, before he carries out substantive procedures, he carries risk assessment procedures to identify and evaluate where there is a possibility of material misstatements in the financial statements. Yes, Darshan, is that clear to you? So you have to remember this is very important from examination point of view also. You have to remember, guys, these things, that what is included in risk assessment procedures. Three things, four things rather, are included in risk assessment procedures. Number one, inquiry of management and staff of the company and others within the entity who can provide information to the auditor. Number two, analytical procedures. Number three, observation and inspection. Now these are also substantive procedures, but all substantive procedures are not risk assessment procedures. Only these observation, inspection, inquiry and analytical procedures are risk assessment procedures. Clear, students? So detailing is there in your module. Like inquiry is directed, like I inquire with the CFO of the company, or I inquire from the employees who are engaged in recording complex transactions, that how you how you have made this calculation. Okay, I just say what I generally inquire. Inquiry means I generally inquire, I get the information. Okay, inquiry is directed at the in-house legal counsel, law department. I already told you that whether company is complying with all laws. Okay, whether he has the knowledge of some hanky-panky things, cases against the company, so that I would come to know whether there is a chance that company has not disclosed these things. Okay, like inquiries directed at marketing personnel, like sale trends, entities marketing strategies, so these kind of things. Analytical procedures, I have already told you in detail that how analytical procedures are performed as risk assessment procedures. How analytical procedures performed as risk assessment procedures. I have already told you by giving an example. And there is observation and inspection. Now, example of inspecting some documents of the company, internal control manuals. This is inspection. Reports prepared by the company and entities, premises and plant facilities. This can be inspection, that I go to visit the plant of the company, and when I observe something there, that would be observation. Okay. So is that clear, guys? So now quickly, guys, are you ready to do some correct, incorrect type of questions? Yes, students, are you ready? Is the screen visible to you, students? You are able to see the screen, guys? Yes. So question number one, students. It is necessary and practical to measure audit risk precisely. Tell me, guys. Now, whether this statement is correct or incorrect? it is necessary and practical to measure audit risk precisely. Students, carefully read the words and tell me whether this statement is correct or incorrect. Yes, this is incorrect statement. Why? Because we have read that it is not, that audit risk cannot be measured precisely. It is not capable of being measured precisely. Actually, I cannot pinpoint that audit risk, say, in this company is, say, 51%. I have no parameter to say so objectively. It depends upon my professional judgment, my subjective professional judgment, with the understanding, the knowledge which I gained by experience. Okay, so first statement is incorrect. So who is writing correct? Dikshita. How you are writing it is a correct statement? It is necessary to measure audit risk. This part is okay. This is true. But it is not necessary and practical to measure audit risk precisely. We cannot measure the audit risk precisely. So number 2, risk of material misstatement comprises inherent risk, control risk and audit risk. Now tell me whether this is correct or incorrect. Yes guys, waiting for your replies whether this statement is correct or incorrect. Risk of material misstatement comprises inherent risk, control risk and audit risk. Yes, Himanshu Sayyad, you have written. Diksha, Dikshita. Yes, guys, when you are answering, kindly give reason so that I come to know that whether you have understood the concept properly or not, whether you have understood the concept logically, and even otherwise I have told you that you would not get credit in the exams if you do not write the answer with reason. So make it a habit. Yes, incorrect, because risk of material misstatement comprises only inherent risk and control risk. Audit risk थोड़ा आएगा risk of material misstatement में. Audit risk is the product of inherent risk, control risk and detection risk. So this question can also be answered in two ways. Either you say audit risk comprises these components. No, you can only answer it that way only. That risk of material misstatement comprises inherent risk and control risk only. There is no audit risk. Yes, Subhashri, you are right. And Anu, yes, Anu Bala, how you are writing correct? This statement is patently false. So try to understand the concepts and read the chapter properly. Now 3. Question number 3, guys. Now let us see what does it state. Students, this is slightly application based. This is slightly application based. So give me reason also. Diksha, whatever answer you have given, please give right reason also. A chartered accountant is auditing accounts of a company for the first time. The client is new to him. Detection risk in such a situation would be high. First you remember what do we mean by detection risk, and then you understand that whether detection risk in such a situation can be high. Yes, Diksha, give answer, give reason for your answer. Yes, Diksha, give reason. Yes, 3-4 mails have come. Subhashri, Himanshu, Pathak. You have both answered correctly, guys. Congrats. Well done. So, guys, the statement says that CA is new to the company. He is auditing the accounts of the company for the first time. So there is every possibility that he does not know the company completely, or since he is new to the company, he may apply faulty procedures. We are talking about chances. So detection risk in such a situation would be high. So what was the detection risk? Detection risk is the risk of not detecting a material misstatement. So there would be a reasonably high chance of his not detecting a material misstatement. Since detection risk would be high, so he would be, to lower his overall audit risk, he would be trying to increase his area of checking. Because he perceives detection risk to be high, so he would increase his area of checking. Okay, so Syed, you have taken the wrong track. Say you are writing, even though client is new to the auditor, he may use expertise in auditing. So when we are saying chartered accountant, then it is assumed that he has expertise in the auditing. Now the company is new to the CA. Now this was the reason. This was the logic, that company is new to the CA. When we say CA, we already know that he has certain professional qualification. He is capable of performing the audit professionally in accordance with standards on auditing. Now we are talking about possibilities. When the company is new to the auditor, then there is a possibility that he may not detect material misstatements. Say there might be some related parties. Since he is not well versed with the company, so the management, there is a possibility that he may be misled, or management may try to make fool of him intentionally. Okay, so this statement is correct. So all of those who are writing incorrect, their reason is also incorrect. And Diksha, your reason is correct. Okay, so this statement is correct. So guys, you have understood. Yes, Syed, tell me, have you understood? Yes, Syed, Ustad Singh, and Ustad Singh has answered correctly. Dikshita, have you understood this question? Any doubts? Yes, question number 4. Now, question number 4, guys. An auditor is going through past year financial statements and comparing financial information on a year-to-year basis to identify areas of risk of material misstatements. He is performing substantive procedures. What he is doing? Tell me. Yes, Darshan, Varsha, and Himanshu. Yes, your answer is right. This statement is incorrect. He is not performing substantive procedure. He is performing risk assessment procedures because the purpose is to identify and assess risks of material misstatement. Okay. No, Shaurya V. Rao, you are writing is correct. How it is correct? It is clearly written that his purpose is to identify risks of material misstatement. He is not finding actual finding. He is not actually finding material misstatement. He is only identifying risks of material misstatements. Therefore, guys, you have to be careful and try to read between the lines. कहाँ पे कोई चीज छुपी हुई है? Where the information is hidden, where the paper setter is trying to trap you. Okay. Is that clear? Yes. Now, number 5. Now, this is also application based. So, guys, I have intentionally made slightly little bit difficult questions which are application based. Why? The purpose is to give you more clarity, to enhance your understanding. So if you answer difficult questions correctly in exam, you can answer questions which are lower than this threshold very easily. Okay. Yes, Darshan, it is true. What you are saying is true. Now, question number 5. A company is planning to list on Bombay Stock Exchange next year. A company hai, the statement is saying that there is a company, it has planned to list on Bombay Stock Exchange next year. Audit risk is likely to be low for current year's audit. Now, I am auditor for the current year. Now, would audit risk be low or high for me? Try to answer this question. Put yourself in the situation of the auditor. The company is going to be listed in Bombay Stock Exchange. So, whether audit risk is likely to be low for current year's audit, why or why not? Is the statement correct or incorrect? Yes, Kiran, right reason. सिर्फ इनकरेक्ट करेक्ट लिखने से काम नहीं बनेगा. राइट रीजन. Just understand when a company lists, when a company has planned to list on stock exchange, then what does it mean? It means that it is going to raise funds from the public by way of an IPO or similar methods. Okay. So, whether audit risk for the auditor in such situation would be low or high? Tell me. So, guys, all of you have answered it wrongly. Though even those whose answer is also right, they have also given wrong reason. So this question was it is not your fault. This question is of a 2-3 times high level. So I will explain to you how it is. So I intentionally framed it. Only, yes, Kiran. Kiran, you have written it correctly. Well done, Kiran. 2 claps for Kiran Shukla. She is stating it may overstate assets and profits. Say guys, when the company has plans to list on a stock exchange, then it means that the past record of the company is good. Okay. अगर कोई कंपनी, when the some company is profitable or it has some good plans, only then the investors would pour in the money. Only then the money will come. Then the issue would be then the investors, the general public or other institutional investors, they would put the money. Okay, so then there would be higher chance that company might manipulate its financial statements. There would be higher chance that company might overstate its profits because it is going to be listed next year. So you have to think analytically, guys. So what would be the audit risk? The risk that auditor gives an inappropriate opinion. The risk could be high. There could be possibility that company is showing a rosy picture, say it might overstate its revenues by fudging the accounts. Okay, or which might lead to extraordinary profits. Isn't it so? So the audit risk would be high in such case. Is that point clear, guys? Yes, students, is that point clear? How did you find the question? Did did it enhance your understanding? Were all these questions, by doing all these questions, your understanding of this whole concept of audit risk is better now? Is it increased? Tell me, guys. So you have to think it that way. Clear, students? Okay. So it is over for tonight. So thank you everyone for listening and watching patiently. Okay, thank you.